all of a sudden, especially with the president's tweets earlier this week, it seems like it's not all good news on the U.S. China front. Should we expect more tariffs to be coming if these talks really fall apart?
Well, it's not a surprise that not much progress has been achieved. There was sort of a ceasefire at the last G20, but both sides are testing each other right now. Each side believes that they have more leverage, that the other side is either economically or politically more vulnerable. And the only way to test out that assumption with both sides have it is through pain. And, the good news, though, is that it doesn't look like either side is eager to dramatically escalate that pain. So for the moment, I think that may be why the market right now, the stock market, is kind of ignoring the fact that there isn't positive news.
You're right, because I would have thought they'd have a much bigger reaction to this idea that, it's not the outcome we had thought a month or two ago. When you say they're not eager to escalate, even the President Trump seemed to indicate if he went another round in this trade war, it would be after the next election. Is that because he's maybe more aware now, having seen the damage to parts of the U.S. manufacturing?
So there's a big outcry, and you see it even in the ISM surveys, from a number of different sectors about how they're affected by U.S. sectors, how they're affected by the existing tariffs and also the prospect of new tariffs. And you also, in the previous guest said that it's the consumer driving the U.S. economy and maybe consumer goods is a good place to be. Well, I saw a Barclays study just about a month ago, which suggested that actually consumer sector is one of the most exposed to an escalation of a trade war with China in terms of the hit to earnings.
Right.
So from the U.S. side, that's why I think, even though the president likes to talk about all the bad things he could do to China, we haven't actually seen him pull the trigger.
Well, except we do have those rounds of tariffs in place already. So if he's saying, OK, he's kind of signaling, I'm going to hold off on this until my reelection, well, markets are still going to start to price that in, aren't they? If they think, OK, now we're going to have that final expansion of tariffs to the rest of our imports from China.
That's been something that's been hanging over the markets since, it played a role in the sell-off in the fourth quarter of last year. The idea that there were going to be these dramatic new tariffs on China. And the good news is that it hasn't materialized. The other thing that's going on, and you referred to Gary Cohen mentioning this, is that China is slowing. But the main reason why China is slowing, the trade war doesn't help. But the main reason why they're slowing is because of issues that were already embedded in the Chinese economy, an over-reliance on credit expansion, over-investment, the mounting bad debt in the economy. And so they're coping with those things. And those are things that a trade deal won't actually solve for China. So that's why I don't think that they're in a big hurry. They're actually focused on trying to contain those issues, and as opposed to satisfying Trump's trade demands, which don't seem to be accelerating at this moment because of the vulnerability of the U.S. economy.
Yeah.